Now, Feroze Azeez is the joint CEO at Anand Rathi Wealth. He has been on our show a couple of times in the past, and welcome back. Happy New Year. Thanks so much for making time. I want to start by just talking to you, how you view the broader geopolitical situation, Venezuela. How much of a risk for Indian markets is it going to be, if not immediately? Give us a sense.
Good morning, Amitoj, and Happy New Year to you and your viewers as well. Coming to the geopolitical uncertainty, I think short term there could be some sentimental damage, but long term it's beneficial because we stopped importing Venezuelan crude. From I think 2013, we had almost gone to almost about our 11-12% of our crude imports were from Venezuela. Now that's come down to negligible, to my mind. So I think this will actually impact the crude prices in the long run, and that will reduce our import bills. So I think from a geopolitical tension, from a capital market spillover standpoint, I see that as not too much of an impact where India has been. Indian currency has underperformed. Indian markets have underperformed. Of course, recency bias says that you should be away from markets which have underperformed. But data clearly implies that there's outperformance after and a mean reversion generally when there is relative underperformance of any emerged market, which is done well on all 4-5 economic counts: GDP, fiscal deficit, inflation. On all counts, if you see tax collections, and if your economy has done well, your capital markets have done well, 6% growth, even after a sluggish quarter last year, last quarter on Nifty, we still, I think there's enough packed headroom for a growth in this calendar year. So I'm very positive.
Just talk to us about Reliance and other oil companies like ONGC, what you see happening. There's some assessment from our previous guest that it's going to be a positive long-term, potentially a positive long-term upside for them. How do you view that?
I certainly definitely concur with your previous guest, because if you look at oil and gas as an index, if I don't want to comment on specific stocks, there are about 15 stocks. That's got a very little weightage, though. It's got about 7% weightage in Nifty. But if you look at their earnings growth, it was already about 52% growth on a lower base because it degrew about 32% the previous financial year. For the first 2 quarters of this financial year, we've had a 52% growth. If this kind of growth is possible, I would say this definitely gives impetus to that growth. Of course, the base has been really small. So long term, I concur it will do well. And I think this will definitely help the earnings momentum continue in this Nifty oil and gas as a sector.
Yeah, we have Jefferies also reiterating their buy ratings on both Reliance and ONGC. I want to also just get a sense from you about, you said the last time you spoke to CNBC, you said that you do think that Nifty could go ahead in 2026 to hit that mark of 27,000, 28,000 perhaps even. That prediction is still intact, you believe. Has anything changed? Because what you had said back then was that FIIs have already sold so much that they're bound to come back to some extent, and DIIs have so much cash that they're sitting on, so they will invest. But my question really is that they could also put money in gold, and we're already seeing that, and that's a factor.
So if you look at equities, equity is a very divergent asset class. So equity gold has got just one price, at best 2 prices, maybe, or 4 prices depending on 22 carat and 24 carat and USD and Indian rupee. But equity is a very diverse asset class. So if you look at domestic guys will pump in money. So if you look at the last 4 trading sessions, 30th, 31st of the last month and the first 2 trading sessions of this month, I think they've put about 10,000 crores, which is a little over $1 billion. But on the other hand, unlike I had said the last time, and you likely bringing me back to what I said the last time, FIIs have still not started buying. They've sold about 9,000 crores or a little over that in the same 4 trading sessions. So what's important is that large volume selling of FII is behind us. There's also talks about giving some tax breaks to sovereign wealth funds, which can invest in India. So my estimate of FIIs coming back into India remains. from a mean reversion standpoint. And coming back to my 27,000, 28,000 Nifty target for this financial year, once I think touching is very logical. Of course, the SEBI circular on long limitation in the option market is impacting the short squeeze, which could have happened with 88% shorts in index futures. FII should have got squeezed on the short side, but that has not happened because there's a limitation in terms of 1,500 crores of delta one can carry the options market, which was not there previously. So to answer your question, I still go back to my conversation the last time, and I'd say that those targets are reasonable to hold on to. And I think FIIs during this calendar year should reverse their position and bring back money from the sheer exasperation of having sold.
Which side do you lean on more, 27,000 or 28,000?
See, I think these are numbers, so I would say that it depends on what day we end up speaking again. So it can range between that, right? So
Okay.
Nifty 3-4% here or there.
Okay, fair enough. Give us an updated guidance on what you're seeing with small cap funds, because that's been your first barometer. When you talk about outflows and inflows, did they get money, lose? That's what, according to you, really determines the start of an unwinding, if at all there's going to be an unwinding. You feel there is not going to be one. So just tell us a little bit about that.
I'm so happy that you recollect our previous conversation. That stands you apart completely, Amitosh. And you're absolutely right. That's the barometer, sentimental barometer we like to examine, because most often than not, in the past, when there have been mass exodus of retail investors in India, small cap has been a reasonable lead indicator. And if coming back to the numbers, there was just one day in December, last 10 days of December, where small cap funds had a negative flow of about 9 crore Indian rupees. So coming back, I don't think that's changed. The AMFI numbers are yet to come. The SEBI numbers are yet to be released. AMFI is the All India Mutual Fund Association, which reports numbers after about 10th of a specific month. I would see that between 3,800 to 4,200 crores is what has come. That's close to $500 million, little less than $500 million in small cap funds, even in the month of December, which generally is a little slower month. So the tide hasn't turned from a retail sentiment standpoint at all yet.
Since you talked about retail sentiment, can you get us some perspective on the fact that there's been another threat from US President Donald Trump, that there will be potentially, he could, if he wanted to, increase the tariffs. And the reason I ask this is because you're confident FIIs will return. In fact, what you've said in the past is that FIIs, these international brokers, they put a 30K target on brokers, but they come in at the fag end of bullishness. So in your sense, because trade negotiations through commentary from both sides, India and the US, has suggested that there will be a resolution, although in recent times we've had other experts tell us that they don't see it happening before, let's say, midterm elections in the US. What does the market need to see for the situation to change to inflows when it comes to FIIs, specifically in this context of tariffs?
Yes, you're absolutely right that the tariff hangover is there. And if you look at the tariff hikes happened somewhere in August, Nifty was about 24,000, 24,500 thereabouts, and we've almost seen a 10% rally, or almost about 8-9% rally from there on, and we've reached the peak of Nifty. Not that the broader market has reached its peak, but at least Nifty has reached its peak. Now, why did that happen? Of course, you know that if there's already FIIs have sold now. They can continue selling, but now let's look at some data. If you look at this last calendar year, has been the highest ever outflow of FIIs, which was close to about $15-16 billion from the Indian market. And in the same time period, domestic institutions bought almost about 7.5 lakh crores, which is almost like about 100 billion, almost a little less than 80 billion. So the highest FII outflow year is still 20% of DII inflow. Now let's internalize this data. 20% is what they could take away in the highest exit year. The second highest exit year was calendar year 2022, where they took away about $13 billion in current currency exchange rate. At that time, the DII inflow was about 4 lakh crores. That implies that at that point in time, a lower outflow resulted in a larger proportion with respect to the DII inflow. So the impact of FII is reducing. That's why you see Trump tried his best to create a capital market panic in India. Again, that threat has come. But after that 8% rally is because of domestic inflows. And there's nothing wrong. We still have 6% of our money in equities. And I think 6% of, we are the lowest equity exposure.
Okay, fascinating. There have been 2 themes in the last, I'd say, month. One was AI, and then Venezuela happened. So now it's geopolitical uncertainty, which was there then also, but now it's more elevated. So you have said in the past that defense is overbought. But what we are seeing right now, perhaps more in the US, but even in India, in the last couple of days, we've seen the defense sector in general, Nifty India Defense climb. But in the US, you've seen Lockheed Martin, General Dynamics climb. But again, when you compare the two, defense and IT, IT is down. It's the laggard. NSE's IT index down 1.4% at close on Monday. Just give us your prediction in the next month, perhaps more, about both these sectors.
Yes, Amitoj, where I come from, I'm a wealth management outfit, right? So I don't even onboard clients who say they don't have intergenerational wealth. So I'm looking at any sector from a 3-4 year perspective to create a relative performance to Nifty about 3 to 4% compounded after all cost of doing some degree of active management. That's my context. I'm not a sell side or a buy side analyst. Now coming to what do I expect? I again believe that defense is overbought. IT, I've been bullish on for the last 5-7 months. It underperformed for the first 3 months of me being bullish. After that, it has done well relative to Nifty. So all my sector calls are just with an objective of beating Nifty 4-5% compounded on a yearly basis. I think that if you are a short-term trader, then there is enough opportunity at a stock level rather than a sector level in India. If you look at this year as well, like calendar year FY25, like most indices have the best performing and the worst performing stock, almost 104% divergent in Nifty. One of the best stocks in Nifty was 66% up. The worst stock of Nifty was 35% down. And in mid cap, the difference was 120%. In small cap, the difference was 240% between the best stock of the same index and the worst stock of the same index. So I personally think if you are doing any short-term trade, you have enough opportunity on bottom-up stock rather than sector if it's a short-term trade. So I think there are several stocks in the NSE where they are sold, but DII is buying. So if you can, I run a strategy where you try and see which are the stocks which are at 52-week low, where the top 10 fund managers have recently bought. Those stocks tend to outperform the index which they are a constituent of. And if you list down the 10 largest fund managers and then try and extrapolate which are the stocks they're buying which are at 52-week lows, if you run a beta strategy on them, you will realize that you will outperform the index substantively. So these are strategies which you can then superimpose derivative on to try and see if you can create a higher beta and monetize your conviction.
All right. Feroze Azeez from Anand Rathi Wealth, thanks so much for joining us once again.